Welcome back to the channel, ladies and gentlemen. It is time for your favorite update of the day, which is for SOFI stock as well as the broad markets, because we did get some bad news, and that's why the markets are down so much today. But it looks like good old Anthony Noto continues to dollar cost average into his already very large SOFI position. Yes, we have more insider buying, but we do have bad economic news to go over. So if you guys find value out of this video, hit the like button, subscribe to the channel, source comments, questions, or concerns down below in the comment section. Thank you guys for tuning in. It is always a good time to get your financial education on, and thank you guys for supporting the channel. I hope you guys make a lot of money here just buying the dip in SOFI as well as other stocks, and I do hope you guys find some value out of these videos, and most importantly, enjoy your guys' weekends, because today is Friday, tomorrow the markets are not open, and I hope you enjoy time with family. Now, nonetheless, let's not waste time. Let's get into this video. Make sure to get your free stocks with Webull, Moomoo, and Public down below in the description of this video. If you guys have not done that already, what are you waiting for? It is free money. Not too many things in life are free. Even the air you breathe seems like it costs a lot of money. Gas is at $5 a gallon. They are killing the American family. But you get free stocks with Webull, Moomoo, and Public down below in the description of this video. So let's dive into it. What happened today with the economic bad news? We got Fed bad news. We just got bad news all around, guys. Fed Mester says inflation hasn't peaked and multiple half-point rate hikes are needed. Cleveland Fed President Loretta Mester said Friday that she doesn't see enough evidence that inflation has peaked and is on board with multiple interest rate increases in coming months. She also doesn't expect the central bank to pause after multiple 50 basis point increases this summer, though she said the magnitude of the moves could be reduced if inflation falls. Now, let's not kid each other here. What is happening right now? Why is the Fed, even people like Fed Mester, Fed Daly, Fed Loretta, right, that used to be more dovish, why are they so hawkish now? Why are they, we need to raise rates super aggressively, like kill the economy? Why are they doing that? Well, it's because they are seeing growth slowing down, and they have to get rates up no matter what happens. They have to get rates up so they can cut rates once a recession actually does come. The last thing you want is rates ultra low and a recession. For an example, when we went into the 08 recession, I know a lot of people are going to remember that. Well, the Fed was raising rates from about 1% in May 2004 all the way up to 5.25% by May 2007. So in 3 years, they raised rates to 5.25%. So they were in a very good position once the financial crisis actually came to cut rates and make money cheap. If the rates were low like they were today and you had a financial crisis, well, you could be stuck in a rut for 5, 10, 20 years because, hey, you got a big problem. You can't accommodate the markets, right? That's the Fed's job, is to restrict liquidity when times are good and to add liquidity and make money cheap when times are bad. Well, the last thing you want is rates this low, not able to stimulate the economy, and you go into recession. So that is the real key here. Don't let the Fed lie to you. It's not because inflation is high. We all know inflation is high. What's really killing American families? Energy prices, food prices, things the Fed cannot do anything about. What has been happening is core inflation, everything minus food and energy, has been going down over the last 3 months. So I just want to make that clear. Don't let the Fed lie to you. This is going to create a massive, probably once in a lifetime buying opportunity. If you missed out on the buying opportunity in 08, you don't want to miss out on the buying opportunity this time around. Let's just say that. I'm still sick, guys. So I apologize for that. But we did get bad economic data for the jobs report, and why I say this is bad is because we got a very good jobs report, so that is bad for the overall market. But one sector of the jobs report was more bad than not, okay? So we added about 390,000 additional jobs. But at the same time, we lost 61,000 jobs in the retail sector alone. And that is obviously not a good sign, right? So you got a lot of new jobs that were created last month, but you also lost a lot of jobs in the retail sector, which is kind of like a mixed bag, because what we've been hearing from a lot of earnings reports from a lot of these retail companies is that things are good. Things are all fine and dandy, but you cut 61,000 jobs in the last month? Not so good. Travel, leisure, hospitality, we gained about 87,000 new jobs for that sector alone. Business services gained about 75,000 new jobs, and then the government gained about 57,000 new jobs, and then smaller categories, construction gained about 35,000 jobs. Other smaller sectors gained a little bit less. Utilities only gained 500 new jobs. And like I said, retail lost 61,000 new jobs. So it's a little bit weird and a little bit interesting that we're kind of getting that conflicting overall consensus of where the retail segment is, or how the consumer actually is. But that was overall seen as a very good report. So it's seen as a very bad thing for the markets, because it's not like the Fed is going to look at 390,000 new jobs and say, things are slowing down, we should stop raising rates. Quite the opposite. They're going to say, hey, jobs are still abundant, people are still getting hired, people are still doing well, so we're going to continue to raise rates. In all reality, don't let the Fed fool you guys. They're just doing this so when we go into recession, they can accommodate the markets no matter what happens. If inflation comes down, doesn't matter, they're not going to stop raising rates. And I doubt they will actually admit that to you guys. But nonetheless, let's take a look at the Ortex data for SoFi stock. And we can see 2 orders totaling $12.01 thousand, positive order value of 83% over the past week. 14 orders totaling $1.54 million, positive order value of 74%. You can see some puts, some calls coming through, but a lot of call activity for July 15th as well as June 17th. The $7 calls as well as the $5 calls look to be quite popular. These $5 calls, where these hedge funds are spending hundreds of thousands of dollars, have a break even of roughly $7.43 per share. So that would imply about a 15% move to the upside from here, and that is definitely a good thing. Now, the short interest, and this is something that just continues to rock SoFi stock. I said this a while back, but the sellers are pretty much gone in SoFi. I don't think anyone that has been holding the stock since, $10, $15, $25 per share, like I started buying SoFi around $25 to $20 per share, and have since averaged down a lot since then. But the sellers are really gone at this point. The shorts have taken over. The shorts are really what is dictating how SoFi stock is actually moving here. So the short interest of free float is 17.21%, extremely high. Current shares that are sold short, 125.23 million. Cost to bar max at about 15%, so it is very expensive to sell SoFi stock short. And we are seeing return shares of 10.15 million, borrowed shares of 2.37 million. So you are seeing the free float out on loan that is going down about 7.72% over the past week. So that is good. That is less potential shares that could be used against the stock, that could be used to push the stock down. So overall, that is good, but you still do have just too many shorts in the stock to see the stock really rally in a massive way here. Now, as far as the insider buying, Anthony Noto on June 1st did buy another 21.21 thousand shares worth about $150,000. So Anthony Noto continues to buy the dip, as well as some boards of directors here and there continue to buy as well. Harvey Schultz did buy 15,000 shares worth about $97.5 thousand as well. Just back here May 13th, you've seen a couple other buys from other boards of directors as well, but that is a very good sign, because the last thing you are going to do, no matter if you are the CEO or you are a board member, is buy a stock in your company that is not doing well, right? This is clearly a sign the stock is doing well, the company, the business is doing well, and SoFi stock is now just introducing options trading to its investing platform, and that's going to drive a lot more members to actually join SoFi, and I'm very excited for that. I'm trying to get a SoFi sponsorship too, so we can get a lot of you guys on the platform. We'll see where that goes. If that does get implemented, I think a lot of people would love to go over there, trade some options, buy some stock with SoFi Invest. But nonetheless, that is what you guys need to know. That's really it as far as what happened for the day. You did see some slightly bullish things coming out of Putin and out of Russia. He did give a speech on national TV over in Russia talking about he's going to let grain exports out of the ports that he controls. Russia controls, as well as they are going to boost the food output by about 50 trillion tons of wheat starting next year. So you're starting to see a little bit less of that food shortage concern, but there's definitely still a problem there, and overall oil prices are way too high, and you are definitely going to see a recession because of that. It's only a matter of time. Now, as far as the technicals for SoFi stock are concerned, we've pretty much barcoded in between about $6.68 per share on the low end and about $8 on the high end. You're trading in this range. We have to break out above the 50-day moving average. When we do, when you see that risk on sentiment, I think that's when you could see a major rally in SoFi stock. You can see this has been our level of resistance for a very long time. I will say the lower this does go, the easier potentially it will be to break out above that. And when that happens, I think a lot of people are going to look at SoFi stock in a different way, especially later on throughout this year and 2023 when student loans do become repayable. Once the federal moratorium does get lifted, I think a lot of people are going to choose to refinance their student loans. And SoFi stock, SoFi as a business is going to be a top candidate when you search student loan refinance. SoFi is the top ad, the top refinance platform, if not the second one every single time. Go ahead and search it up for yourselves right now if you guys don't believe me. That's going to be a very exciting time to be invested in SoFi, but you want to get in your position now if you are not already, if you align with that belief and you think SoFi will benefit from student loans and student loan refinancing. Now the RSI is at 48.46, so looking a little bit oversold at the current moment. The MACD has been bullish for quite a while as we are dramatically off of our lows, but still, we got a long way to go before we're at all-time highs. We'll just say that. The MACD is starting to curl down. Looks like it might go bearish, but we'll see how next week plays out. I think it could be a pretty bullish week across the board for equity market. So that is pretty much going to be all for this video. Thank you guys for watching. Enjoy the rest of your weekends. Get your free stocks with Webull, Moomoo, and Public down below in the description. If you guys want to support the channel as well, join the Patreon. Get access to the trades that I make and the stocks that I am buying. We did just buy a brand new stock as of today, and that is Coinbase. Extremely undervalued. Love to give you guys my thesis on that if you guys want to be a part of it. Link down below in the pinned comment. Thank you guys for watching, and I will see you in the next one.